Hello, welcome to Accounting Hub. I'm Professor George Carpin, PhD in accounting, and our topic today is classifications of debit investments. When we are talking about debit investments, usually we have three different classifications. The first one, the classical one, held to maturity, used for debt for which the investor has the positive intent and ability to hold to maturity. So if I purchase a bond and the maturity date is in 10 years, I will keep this bond for the 10 years. So we have no unrealized holding gain and losses. So no fair value here. And we carry it in balance sheet at amortized cost. Trading is the opposite. Used for debt that is held in an active trading account for immediate resale. So here, it doesn't matter if my bond is for 6 months, 1 year, 5 years, 10 years. It will always be a current asset. And we recognize unrealized holding gain and losses in net income. So it is gain or losses in net income. And we carry it in balance sheet at fair value. Available for sale, it is the middle between trading and held to maturity. It is used for debt that does not qualify as held to maturity or trading. So I don't know for sure what I will be doing with that. So we recognize the unrealized holding gain and losses. However, in other comprehensive income and other comprehensive income, it is not uh, in income statement. It is in shareholders' equity, and it has a huge difference at the end. And carry it in balance sheet at fair value as well. The key difference among the reporting approaches is how we account for unrealized holding gain and losses. For instance, oh, and by the way, if you have questions about other comprehensive income, we had a video about other comprehensive income statement, and it is in our video description. Okay, so let's go to our Excel file. So this is a bound that we have. And if you have questions about how do we find these numbers, about this rate, about this amortization schedule, we have a video about bonds, and it's also in our video description. And another stuff that is in our video description is this Excel file. All our Excel files, they are free, and the link to download is in our video description. Okay. So here we purchased a bond on January 2020, and we receive interest semi-annually. So in June 2020, December 2020, December 2020, we have this fair value, and we sell it in January 2021. Okay, so that's why we don't have semester 3, 4, 5, and 6, and so on. So, okay, January 2020, our journal entry, debit, investment in bonds, face value. Cash, how much we pay it? We pay the carrying value or the present value. And the discount is the number to balance. The difference between face value and the carrying value. So $14,000 here. Let's use the same mask here. Okay, now June 2020. What do we have here? Cash. How much we receive it? Cash interest, 15. Discount. Oh, sorry. And we amortize our discount. We amortize here this 2000. Uh, okay. And interest revenue is the number to balance. So our 17. Okay. Good. The formula was a little bit wrong. December 2020. another interest revenue. So cash interest, another 15, discount 2.2 thousand, and interest revenue 17,241. So okay, this is the regular bond. So let's go here. Let's put myself here on top instead of bottom. December 31st, fair value, and we sell it in January. So let's consider that this bond is held to maturity. So held to maturity, let's go back. We don't recognize unrealized holding gain and losses. So no journal entries here for December 31st. And when we sell it, it is just like selling any other asset. We debit cash, 293. We close our discount on bonds investment. So we close it $10,000 on debit. And then we will have this journal entry closed. We close our investment in bonds. So we credit investment in bonds. However, this journal entry is not balanced. So we need to balance gain or loss. We need a credit to balance it. So we need a gain. So we have a gain because we need a credit. How much? Sum of our debits less the sum of our credits. 3,395. Okay, so this is the held to maturity. Easy, as I always tell my students, easy, so boring. Let's do some coolest one. December 31st, trading. Now, trading is the opposite. We recognize the unrealized holding gain in net income. So uh, it is a gain here. So how do we do that? Uh, Fair value adjustment. How do we find it? It is the difference between fair value and the carrying value. Fair value less the carrying value. So 5,000. Why? And then gain 5. Why 5,000 here? Because on December 31st, we will have, so December 31st here, we will have this carrying value in our balance sheet. Investment on bonds, $300,000. Discount on bond investments, negative 10 because it is a credit. And now the fair value adjustment, positive 5. If we combine all of these numbers here, we have a total equal sum 295. That is our fair value. So here, what do we have? Carried in balance sheet at fair value. So if we combine our net investment here will be the 295. Okay. And January 10th. First of all, we need to adjust our fair value. Here we have a decrease, $2,000. So we have a loss here. How much is our loss? 295 less 293. And the fair value is here. So fair value, now the fair value adjustment is $3,000 instead of 5 because we decrease it in 2. So when we sell it, we have no gain and losses because our gain and losses we recognize right before our sale. So the journal entry will be cash, 293. Discount, the same 10 here, just like on held to maturity. We have no more investment on bonds, so we also debit the $300,000. And we also debit here the fair value adjustment. That is 5 less 2. We adjust the $3,000. So no more. So we close our fair value adjustment. We close our discount. We close our investment in bonds. And if we do the math here, uh, 3003, 3003. So here we have a balanced journal entry. Some companies, they combine these two journal entries here. So we could be doing that as well. So we would have the loss here on debit, and the fair value adjustment would be 3.3 plus $2,000. So we could combine these two journal entries in only one. Okay, so it doesn't matter. We will have the same ending balances. Now available for sale, it is pretty the same as trading, especially on December 31st. Fair value adjustment, gain on investment. However, the difference is the unrealized other comprehensive income instead of net income. So fair value adjustment, the same 5, gain, the same 5. Now, on January, we have, instead of loss here, we debit our gain. Why? Because this gain here is other comprehensive income, and other comprehensive income is in shareholders' equity. So shareholders' equity, we are able to debit it. So let's debit it, the $2,000, the $2,000 here. Okay? And okay, we are selling this investment here. So we don't have the gain anymore. We will close this account here, and we will also close the fair value adjustment. These two accounts, we will have the same ending balance for each investment. Maybe if we combine a lot of investments, they will not have the same ending balance because we have gaining losses and so on. However, for each investment, fair value adjustment and gain on investment, we will have the same ending balance because it is always the same journal entry. So let's close both. Here, fair value adjustment, 5 less 2. Or sorry, gain on investment, 5 less 2. Same number for fair value. We have here, they are closed. And when we sell it, then it looks like they held to maturity. Because we have no more ending balances on fair value adjustment and gain on investment. So this available for sale is quite a combination between trading and held to maturity. Sometimes it looks like trading, most of times. However, when we sell it, it looks like held to maturity. So cash, 293. Let's close our accounts here. Let's close discount. So we debit 10. Let's close investment. We credit 300. And the gain on sale is the number to balance. So the sum of debits less the sum of credits. And here we have the $3,300. These names here, the name of accounts here, uh, it can vary depending on the textbook, but this is usually how we call them. Okay? So guys, let me put myself on the bottom again. Okay, here we are. So thank you so much. Please subscribe our channel. You will be the first one to know when a new video arrives. Like our Facebook page, Accounting Hub by Dr. Scarping. Also, like this video, please. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you always, all the time.